Hi, welcome to the fifth and last mini lecture for Chapter 2. Before we get started with our last lecture, I'd like to call your attention to the last section in our notes, and that's on preparing journal entries to record manufacturing and non-manufacturing costs in a job order cost system. I'm not going to require that you learn the journal entries for how to do this. It's sufficient that you know how to use and record entries into T accounts. But for those of you who are accounting majors, you really should be familiar with the recording process, with the rules of debit and credit and how to record things in journal entry format. For those of you in finance careers or planning to eventually study finance, you should make sure that you're familiar with how to create these journal entries. For those of you that are not going into finance, then it would be sufficient, or accounting for that matter, it would be sufficient for you to know how to follow the flow of costs through using T accounts. Okay, so let's get started on our topic for today's mini lecture, and that is Learning Outcome 2-6, how to calculate the cost of goods manufactured and the cost of goods sold. But instead of using our notes, I'm actually going to pull in page 66 from our textbook, just because I think it's easier to follow things when you have actual numbers rather than just account names listed. Okay, so we are now on page 66. What you're looking at is the cost of goods manufactured report. And this represents the total cost of all jobs completed during the period. Okay, so what we're trying to do is identify the three product costs for the period stated. So direct materials, direct labor, and manufacturing overhead applied. How do we determine the amount of direct materials? Well, we can start with our beginning raw materials inventory of $10,000, add in what we purchased, $25,000 worth of materials, subtract out the materials that are indirect because we want to isolate just direct materials, and then finally subtract out what we're left with in our ending raw materials inventory, and the result should be direct materials used in production this period. Next, we add in direct labor, and that amount is easy to calculate because we can look at our time tickets, and that should not be an issue at all. Same thing with our manufacturing overhead applied. We can look at our manufacturing overhead account for that. That shouldn't be a problem isolating that as well. So if we add our direct materials used in production of $25,000 plus our direct labor, $6,000, plus manufacturing overhead applied, $4,500, that gives us the total current manufacturing costs. But remember, what we're supposed to identify is the cost of goods manufactured. See, there's an ED at the end of the word manufacture, which means these are completed goods, the cost of completed goods, what was finished. So to now calculate that, we're going to take our current manufacturing costs that we just added up, $35,500, add in what was not finished at the beginning of the period. In other words, what we started with in a partial stage of completion, which is $450,000, and then subtract out what's still not finished at the end of this period, $213,500, and that should give us the cost of what was completed. We call that the cost of goods manufactured. Now this is the amount, if we go back to our T accounts, the amount that is taken out of the work in process inventory and transferred into finished goods. So the way we calculate that amount is through this cost of goods manufactured report. Okay, now let's take a look at our income statement for manufacturer. And here's our income statement. Make that a little bigger for you. Okay, if you remember from Accounting 116, sales revenue minus the cost of goods sold equals gross profit. Now it's just going to be a little bit more complicated calculating the cost of goods sold. We're going to start out with our beginning inventory of $600,000. Add in the cost of goods manufactured, what we added to finished goods inventory for this period, and that is $272,000. Subtract out what is still unsold, and that gives us the unadjusted cost of goods sold. Now it's called unadjusted because it's based on the actual direct materials, actual direct labor, but the applied manufacturing overhead for jobs completed and sold. Remember, we have to adjust for whatever the balance is in the over or under applied balance in the manufacturing overhead account. So in this case, we had under applied manufacturing overhead. In other words, the actual costs were less than the applied manufacturing overhead costs. So we are increasing the cost of goods sold for that difference. So $272,000 plus $1,000 equals $273,000 as our cost of goods sold. We take our sales revenue, what we have sold at the selling price. We subtract out what we have sold but at its cost, $273,000, and that gives us our gross profit. From that, we subtract out our selling and administrative and general expenses to arrive at our net operating income. And the formula for the cost of goods sold is right there in our notes. You can use that for your homework, as well as on the top of the very next page, the formula for calculating our adjusted cost of goods sold. Now, just one more thing to mention before we end this chapter and this lecture, and that is applying job order costing to a service setting. Job order costing can be used very effectively in a service setting because when we think about it, there are a lot of similarities with job order costing. However, instead of calling them jobs, we would call them clients. We would track costs based on clients or customers instead of by jobs. And for service settings, the primary driver is usually billable hours. A billable hour is the time that can be traced to a specific client or customer. That's similar to direct labor hours in a manufacturing setting. So each employee keeps track of the time spent on each client's account so that the client can be charged or billed for that cost. And any other cost that could be directly attributed to a specific client or customer would also be tracked as well. There may be some indirect costs, however, that need to be allocated, just like in a manufacturing setting. So it might be, in a healthcare setting, it might be generic supplies like gauze and bandages. With other types of service businesses, it might be employee time spent on training or supervision or paperwork. And you would have to determine an allocation base or cost driver to allocate those costs. But essentially, job order costing can be very effectively used in the service industry as well. And that ends our lecture and our chapters, mini lectures as well. Take care. Have a great day.